Good morning, good evening, wherever in the world you might be watching from. It's Bismarck. New trading Lagos, Nigeria, and definitely was a weak performance. But let's get to the top stories that set your agenda. Starting with the oil market, we see Brent crude futures extended gains today, inching up amidst political uncertainty producing countries. Africans died in a helicopter. Let's take a quick break now. We'll come back and welcome back. Well, as I was saying before, still volatility right in the global oil market at this time. We're seeing Brent crude inching up. Also, WTI, that's also up, leaving that 70, it was below $80 for a while now, but what, $83.75 for the WTI crude version, up 0.01%. Right now, investors will be closely watching disruptions to supply and demand in the market to see where prices are going to go next. But volatility, that's what analysts are expecting this week in the global oil market. Let's get a check on the FX market now. We see last week, we see the Naira there closing mixed in the official windows. For NAFEM, we got a gain of about 2.39%. That was for Friday of last week. Then we see on the flip side, NAFEX, that closed weaker, 1,531 Naira. That was down about 2%. So we're seeing volatility still in that market. That's for the FX market. But analysts are expecting rates will trend around these same levels. That's for this week. Let's get you some other top stories. We see the central bank has withdrawn its decision to deduct levies for cybersecurity. A circular signed by the bank's directors of payment systems management and that of the Department of Financial Policy and Regulation, asking all commercial, merchant, and all non-interest banks, as well as other financial institutions, to stop the withdrawal forthwith. The CBN, in a circular dated 6th of May 2024, mandated all banks, mobile money operators, and payment service providers to implement a new cybersecurity levy following the provisions laid out in the Cybercrime Amendment Act of 2024. But that has been taken back at this time. So all the reactions we got to this last week, that can be laid to rest now. That's according to the CBN. All right, let's get to the first discussion now. It's the 295th Monetary Policy Meeting for 2024. We've already got 600 basis points hikes for lending rates in Nigeria. Well, let's get a sense of how businesses are doing so far and get an outlook for the business climate in Nigeria. Joining us for this conversation is Tesu David Ukeshe. He's the CEO and Managing Director of Tetwood. Joining us from our Abuja studio. Great to have you on the show.
Where's the water?
Okay. All right, I don't know if you can hear me, Mr. Tetwood, but you are live on the show right now. Can you hear me? Hello, Mr. Ukeshe.
Yes, I can.
Fantastic. You're live on the show now, and don't worry, you're gonna get that water at some point. But let's start the show now. You know, since the arrival of the new leadership, the interest rate, we've seen interest rate increase twice, from 18% to about 24.75%. How would you describe cost of doing business in the first quarter? I know you're a businessman. Hello, Mr. Ukeshe, can you hear me?
Okay, thank you very much for this great opportunity.
I don't know if you heard my question. Okay.
Okay, thank you very much.
Mr. Ukeshe, can you hear me?
Yes, I think there's a little bit of delay though, but if I can go on.
Yes, you can. You can go on. You can go on.
Okay, great. So, look, the environment is getting better at the moment. You know, there are a few challenges here and there, but I can tell you that what's happening? Excuse me.
All right, so we're having issues there. We're going to try and get Mr. Okesha. We'll still try and get him on the show now. Have a little audio issue right there. But definitely, it's all about what the MPC is going to do next. And the meeting that's starting today, tomorrow we're going to get the decision. But definitely, we're going to try and get Mr. Okesha to find out how businesses are doing. You know, right now, the first quarter, we're seeing cost of credit at high levels. You know, right now, definitely, if you're going to the bank to get credit,
I'm hearing, but I can't.
Paying a lot. But Mr. Okesha, you can hear me, right? Okay, we're still going to try and get that audio. You can hear me very well. Okay, so as I was saying, you know, definitely we've seen, you know, interest rates up about 600 basis points. But we'll get back to Mr. Okesha. Let's bring in Mr. Olatunde Amolegbena, MD, Arthur Stevens Asset Management. He's also joining me via Zoom. Great to have you on the show, Mr. Amolegbena.
Thank you, Ladi. Thanks for having me.
Yeah, fantastic. So definitely it's all about what the CBN MPC is going to do with rates at this time. How are the markets bracing? Because right now, everyone's expecting another rate hike, maybe about 100 basis points or maybe 200 basis points. How are the markets bracing for this?
I think that you're probably right on the balance of scale. We're most likely to see another rate hike, maybe not as aggressively as we've seen in the past. Nobody's expecting a 200 or 300 basis points increase this time around because, I mean, if you look at it, I'm sure some of the members of the MPC will look at what they've done in the last few months and think that, you know, it is actually having impact on the market. They probably see some level of stability in terms of the FX market. They probably see inflation rates slowing. Maybe not started coming down, but the rate of growth of inflation is slowing. We are not seeing month-on-month inflation increasing by 300%, by 300 basis points as we have seen. From March to April, where we saw something like 100 basis points increase in inflation rates. So some members might feel that, you know, the tightening measures is having some impact. But I figured that some other members might also feel that, you know, the pass-through of the increase in interest rates in terms of the cost of borrowing for manufacturers and other service provider could also be exacerbating the inflation rate. So, you know, the CBN MPC, I feel, will have to sort of seek a balance. We've not gotten to the point where we'll start seeing a situation where they start to ease the tightening. But I think that, you know, maybe a 50 to 100 basis points increase this time around might be appropriate.
So definitely, if talking about, you know, the inflation numbers for April there, we did see it's another rise, you know, but a deceleration at this point. Not, as Mr. Amolegbena mentioned, the rate of rise is not as significant as we've seen in other months. We've seen food inflation still at that 40% level, 40.53%. That's for April. Headline inflation, 33.69%. So, Mr. Amolegbena, looking at these numbers now, is it safe to say that inflation could be peaking, you know, in Nigeria?
I think that we are getting to the point where, honestly, you know, you could even be seeing some level of consumer fatigue. You know, you can only move price, you know, so much before you start seeing resistance from even your consumers. So when manufacturers start or sellers start seeing situation where the volume starts to drop relative to what they used to sell, simply because they are moving prices too fast, then you could see that resistance could also be helping to slow inflation. And I think that this is part of what we're witnessing at this point. And so ultimately, we're probably not going to get to the point where, you know, we start seeing inflation rate starts to drop. But then in the next few months, what you're likely to continue to see is a situation where, you know, the rate of growth continues to slow. So there's a bit of apathy, consumer apathy on one side, and also the resistance on the side of manufacturers and sellers, to continue to continue to make an effort to pass over the increased cost to the customers. So something has to give, and I think we are getting to that point now.
Right, and definitely, well, even in the U.S., we're seeing, the central bankers trying to get back to that inflation target of about 2%. But looking at countries like Nigeria, is it time to start shifting the inflation target, seeing how high or how far away we are from that?
It's clear that though the CBN governor had mentioned that they are targeting an inflation rate of 21%, we don't seem to be moving anywhere near that level. Even the direction of the inflation seems to be north rather than south. And if we are going to achieve that inflation target he has stated, I will assume that we're in May, we should start to gradually be seeing rates start to move south gradually. But we're nowhere close to that. So it might be appropriate for them to take a look at their figures, take a look at what is happening in the economy in general, and probably adjust their expectations to meet with reality.
Right, definitely. Reality is hitting everyone at this point. But talk to me about the markets now. We're expecting the decision by tomorrow. The meeting is starting today. How do you see the markets reacting? Well, definitely consensus is that there will be another hike. Are you expecting the equities markets, investors there, to react to this, or it will just be correction as usual for the NGX All-Share Index?
We've seen, the equities market has always been a forward market. So some of these issues are such that analysts will have worked into their evaluations already. I think that we've probably seen some level of correction already to account for this expected result from the MPC tomorrow. I think that even after the result is, the announcement comes out after the meeting, there might be some level of correction. I do not see a significant drop in prices, given that correction has been happening over a relatively longer period. But I expect that the correction will still continue, and then we'll probably achieve some level of stability, maybe by the third quarter of the year, when we see what the impact of some of these policies on inflation, and we actually see that the inflation rates actually start to come down. But for now, in the equities market, I expect that correction will continue. The bond market and the fixed income market, we are not. It seems to me that investors have arrived at a point where that market doesn't seem to be moving in tandem with inflation. So doesn't seem to be moving in tandem with the policy rates. So you see situations where the last auction, the stop rate was something in the region of 20%, while the policy rate is not of 24. So, and we've seen that now see that happen in two T-bill auctions now. So I think that the fixed income market seems to have achieved some level of stability when it comes to rates. The equities market will continue to react, but albeit at a steady rate.
Right, we'll definitely keep watching. But corrections, present opportunities to some investors. Where do you think investors should be looking at? What sectors should investors be putting in focus right now as we see all of these correction on the NGX?
But it's clear that we are not going to continue to see correction. We are not going to see a situation where inflation continues to rise, ad infinitum. And interest rate is also not going to continue to rise ad infinitum. So my advice as a stockbroker will be for investors to continue to look at some specific counters. on a general basis, you see a market, that is generally cheap anyway. But because of the correction and because of reallocation of assets to different portfolios, we're seeing some of these counters that are already cheap even become cheaper. I'm looking at counters such as those in the telecom sector, those in the industrial sector. They were relatively cheap before. Because of portfolio reallocation, they have even become cheaper. So I look at counters in those sectors. The banking sector, of course, the expected recapitalization will continue to have some sort of dampening effect in that sector. But that does not mean that there are more counters there that are still bear very good value for us in our organization. So in terms of priority, I will look at the telecom sector, followed by the industrial sector, and then a few counters in the banking sector. My advice is, of course, to position ahead till when things do turn around, because at the point things do turn around, one might be chasing the market at that point, and as an investor, it's never a good advice to chase the market, right, to position ahead.
Yeah, definitely better to be ahead of the markets, definitely as an investor. Thank you so much, Mr. Olatunde Amolegbe, MD, Arthur Stevens Asset Management Limited. Thank you so much for coming on.
My pleasure. Thanks for having me, Lady.
All right, we'll take a break now. When we come back, we'll get back to the first conversation with Mr. Tercio. I think we should have sorted the audio issues by now. That's in a moment. Just stay with us. Welcome back. Well, let's find out how businesses have been navigating the high interest rate environment right here in the first quarter, with about 600 basis point increase in the lending rate. And let's bring back Mr. Tercio David Ukeshe, is the CEO and Managing Director of Tetwood, right there in our Abuja studio. I'm sure you can hear me now.
Yeah, I can.
Fantastic. So let's get back to the conversation now. I said, since the arrival of the new leadership, we've seen about 600 basis points there for cost of credit. And I know you're a businessman. Talk to me about how people in your industry are navigating this high interest environment.
Okay, thank you very much for this great opportunity. So it's quite simple. I mean, I want to start up with the Bank of England, for instance. I mean, the interest rate is at 5.25%. And I'm advocating for these interest rates to be able to come down. Reason being that the higher interest rates, the risk of having manufacturers not getting credit from the banks, because everyone is not convinced to take money at a higher rate, and so if you have this, if you have that the rates lower, what happens is this: there's more spending in the economy, and then you have the inflation rates lower a little bit as well. So I want to encourage. So it's quite very easy to be coming from the outside, and the guys in the inside in CBN and others, we might not see what they are seeing. So it's quite easy to share our opinion, but we are advising that, look, if there's any possibility, remember Mr. President saying some time ago that he wants the interest rates to be low, because he understands, coming from the corporate background, that, look, if interest rates are low, companies, manufacturers, traders, everyone will be able to borrow at a convenient, pace that they'll be able to pay back. So that's my take on that.
And looking at the environment at this time, definitely everyone's looking for. They want that steady cash flow, and you need credit, to be affordable at this time. But what do you think the government can do, at this time, to allow for producers and businesses, because right now we're dealing with inflation numbers, we've not seen in a long time. What do you think can be done to support businesses in, bringing prices down, at this time?
Okay, so let's start with the aviation. I'm encouraging the government to do something about. How about we give, tax holidays to the aviation industry, for instance, so that we can make, movement easy, because a lot of business people, the traders, the SMEs, those guys who push the engine, these are the guys who control the engine of, of the economy, those small businesses that you have around. And so you can imagine a small business person, a young fellow, wanting to go down to Lagos or Kano to be able to, buy or sell or, go for a business meeting. He needs to spend maybe 150 or 200,000 for economy class. This is so expensive. But if we give tax holidays to these guys, we will, they will have no choice but to crash down the travel, the air tickets. This will help movement and goods and services. So that's one of the fast and quick thing that the minister, who is doing a great job, can look into as well.
And let's look at another big issue now, currency. The currency, the Naira, at this point. We saw weakness last week in the FX market. And we've seen how, currency devaluation, how that has played into the results we've seen for the first quarter for some companies, listed on the stock exchange. So talk to me about how the private sector, is seeing currency and FX issues, at this time. Is there confidence, on your part that we'll see stability, in the FX market going forward?
So it's quite very simple. Look, dealing with forex is quite very simple. When a country is exporting, you bring back the foreign currency back into your country. And how do we do that? Companies are unable to get finance that easy. And I'm calling on the banking sectors as well, because this is a time we have to all come together and join our hands together to be able to help Mr. President and help the country grow. Because business people need facility. They need cheap loans. That's why you see you have the Indians coming with the 0%, zero interest rates, money they get from their countries on other organizations that they belong to, and they come here. They do so very well because you can't compete with them. They're getting zero interest rate from where they're getting, or sometimes 2%. So how do you compete? And so we need to produce and and export for us to be able to take care of this forex issue as well.
Yeah, and definitely tomorrow we're expecting the decision from Central Bank MPC. Definitely, consensus is there will be another rate hike. We don't know by how many basis points yet, but what are you expecting? And at some point, where do you see, say, the MPC saying, okay, it's time to, cut back and hold on interest rate hikes?
Look, I am expecting, for them to go negative, actually go backwards. Increasing the rates at this moment is not a very good idea at all, because, like I said before, borrowing. The banks are there for business people to go to borrow, but at the same time, while you're borrowing, you should be able to pay back and make profit. And at the end of the day, if you go borrow from a commercial bank and you are just working for that commercial bank, then it's big trouble. And there's something I want to mention to you as well. So the banks, I think the states, governments are one of the big problems to manufacturers or business people in Nigeria. Why do I say this? Because look, the banks are so comfortable. They go easy. They go to the state governments, the state government comes to them, get loans, and at very ease, and so they're so comfortable that they're not willing to go into the real market, the real economy, and borrow money too. So the state governments, I pray that, this is my prayer though, that the federal government will be able to make things quite difficult for the state governments to go out there, for governors to go out there, approach banks and just take loans and take loans easily. If this is achieved, what will happen is this: the banks will be forced to go out there and approach manufacturers and business people.
Right. I guess some of these banks maybe see the states as low risk at this point, but definitely we're all looking forward to see a low interest rate environment right here in Nigeria. But definitely, it seems that will happen when inflation numbers come down significantly. But thank you for coming on. It was great having your perspective, Mr. Tersu David Ukeshi, is the CEO, Managing Director of Tetwood. It was great having you. Thank you.
My pleasure.
All right, so definitely countdown. Tomorrow we're going to get a decision from the CBN MPC. What's it going to be? Maybe 100 basis points, maybe 200 basis points, but consensus is there might be another rate hike coming for the next meeting. That's it from me on Business Morning. Markets are open now. We'll give a summary of closing numbers later on. I'm Ladi Williams. Bye for now.